John C.
Denise Richards and the lovely Lulu.
Welcome back to All Things Homes, where we talk about all things around the home, in the home, everywhere.
Everywhere in the home.
In the home, everywhere. All the prepositions. Welcome back.
In, on, around, about.
Above, aboard. I know a whole song for
That's
that I had to learn.
Okay.
Did you learn that song? Did they make you learn that song?
I didn't,
It's
John.
a good one. I'll
What
never
day is it
forget
today, John?
February 22nd.
What is it? The National Day is...
National Day
let's
of...
see here. It is the National Day of Margarita Day. It's 5 o'clock somewhere. Yes, of
salt
course.
Salt or no salt?
Salt.
Really?
Yes.
Okay.
All
right.
It's also National Cook a Sweet Potato Day.
You know what's funny? I did that yesterday.
You are a day early.
I usually am.
It was the National Cook a Sweet Potato Day Eve.
Do you love sweet potatoes or no?
I do love sweet potato.
Do you?
I do.
I like
I do.
sweet
And
potato
you know,
casserole.
we always celebrate one state, right?
I wasn't done with sweet potatoes.
You weren't done with sweet potatoes?
No. What do you put on your sweet potato?
Nothing. I don't
Are you American?
I like a little butter, maybe.
Butter.
That's
Thank
it.
you.
That's it. That's
How about cinnamon? I've never tried that.
It's
I've
not
never
a
tried
dessert.
it.
No, I don't like it.
Cinnamon
tried
does not make it a dessert.
It's not good.
And brown sugar, that makes it a dessert. Have you guys put brown sugar on yours?
I don't care for it that way.
We're not friends anymore.
Oh, boy.
All right, tell me, what do we got next? It's what state day?
Well, it's a state that I probably wouldn't mind if they seceded from the Union, I guess. But
Separate.
Hey, it's National California Day.
California Day. Celebrate California.
I love my Californians that have come to Florida. They are some of my favorite people.
We have a lot of them.
Yes, we do.
Because people are leaving California.
Yes, by
If
the
you
droves.
don't know that, they have been leaving for a long time.
It's a sad state of affairs, literally. Anyway.
No, not anyway, Jen. I'm not moving on from California.
Okay.
We welcome you Californians with open arms.
And pause.
Just leave your politics there.
Yeah.
How's that? We love you. Come to the Florida Freedom State, as I like to call it. Me and Ron. Ron and I call it the Freedom State of Florida.
That's right.
All right, let's keep going. And that's why we can do this, because we are in a freedom state. And we can poke fun and humor at other states. It's our freedom place. And if your feelings just got hurt by that, we're sorry.
Then you're not kind of show. Because there's times that Florida's the butt of other people's jokes, and guess what? We're okay with that.
We're okay with that?
Sure.
Just don't like and describe. Don't like and whatever. Anyways, all right, it's a great day. Last time we talked about homeowners staying in their homes longer.
A lot longer, yep.
A lot longer.
Yeah, old people don't want to move out.
No, I don't want to move out. And I'm not even old. I like where I'm out.
Neither are they. Because
Neither
I'm
are
in
they.
that group, so.
Denise has moved on up.
Yeah.
Anyways, watch that video. It's a great video. It explains really a lot of the reasons. I think we went through 5 different reasons why people are staying in their homes way longer than what they used to. The average now is, not average, but people in a certain generation are staying up to 20 years in their homes.
And how that plays into our inventory problem.
All of it comes together.
Yeah.
Today's article that we're going to talk about, raise your credit score to better your mortgage rates. If you didn't know this, Denise is going to educate us today. And if you have a good credit score, you can get a better mortgage rate. Same with you when you go to buy a car, different things like that. They look at your credit score to see how creditworthy are you. And if it's good, lower interest rates typically. Right. Am I right about that?
That's right. High risk equals high rate. And if you're a high risk to a lender of any shape or form, your interest rate is going to be higher. That's just how it's represented. Now, there was some news in the mainstream media not too long ago about how the FHFA had changed the schematic on good credit scores and tried to make people believe that if you had a good credit score, you were not going to get a better rate. That's simply not true. It still pays to have a responsible, phenomenal credit score.
Good.
Ways to make sure that you keep your credit score high or to make it get higher.
Before we go there, because we are going to go there, we're going to help them know what that is. Give the people an idea of what a good credit score is. What's a lender looking for? 480? 580?
I think the highest that exists is 850. I've never seen one. Mm-hmm. I think I've seen an 812 is the very highest. The lowest credit score to get a mortgage would be a 580. But again, that's a more risky credit score, so it's going to be a higher interest rate program.
Well said.
Yeah. They're looking at 640 for starters with a conventional loan. That doesn't mean you can qualify for a conventional loan.
But it's a jumping off point.
Yeah, it is a jumping off point. There are times right now in the marketplace where you may have a higher credit score and still want an FHA mortgage. So there's so much to know about what you want your credit score to be, how to get there. John, did
Yes.
you? Yeah.
I have a lot to say here.
I know
Buyers
you do.
with good credit scores have a better chance at lower mortgage rates. Here's some tips for improving your credit score. So this article is helping the person watching this video, you, because you're special to us. How do you get that score higher if you're unaware of how to do that? Here's some points. Pay your bills on time.
Easy peasy, no brainer.
Easy peasy. Pay those bills on time. Credit cards. Pay your credit card bill in full each month rather than carrying a balance.
Absolutely.
Don't carry a balance.
Absolutely.
If you can do that, keep your credit utilization below 30%.
That is key. It literally has tiers as it goes down on that balance owing to high credit limit.
Yes, tears. Not tears from your eyes, just tears. So keep it under 30%. Don't apply for too many accounts.
Yeah, stop applying for credit.
Stop.
If you have 2 trade lines, leave it alone. Don't apply for any more credit. Don't let people tell you that you should have a lot of credit lines open because you should not.
No. And if you're getting a loan, don't go get a new cell phone carrier because as someone found out years ago, some cell phone carriers will pull your credit when they're giving you new phones.
And that is a hard credit inquiry.
Hard credit
and not
inquiry.
the good kind.
Not the good kind. Not the good kind. Okay, don't apply for too many accounts. Review your credit report and dispute errors. That's a good one because, credit reporting can be incorrect.
A lot of times it can be incorrect, but there's a big misnomer in disputing your accounts on your credit report. You can go into the website at Experian, TransUnion, or Equifax and dispute any account that you want to.
Yes.
And then that creditor has to go through the process of either proving that you owe the debt or wiping the debt away.
Wipe it away.
A lot of times it just goes back into an account, but folks think that that's erasing it from their account and their credit profile, and it just is not.
It's not.
You have to do more follow-up with that creditor. It doesn't just go away. So
That's right.
That's important to know, and that's a big piece in terms of keeping your score up there.
At no cost, once a year, request your credit report from these companies. You just mentioned that. If your credit score is too low, obtain a new traditional credit card. Okay, so sometimes you need to get a credit card.
I've had to guide my clients that way before.
Get out of here.
Absolutely.
I didn't know that. That's new to me.
I actually have been working with this client for 6 months, waiting on a credit score to appear. And
Wow.
it did. So we're so excited.
If you're buying a new home, you obviously want to obtain the lowest interest rate because inflation's under better control now. The Fed Reserve is like to reduce interest rates in 2024, which I think we would agree with. It looks like they're going to reduce those twice, maybe 3 times, but twice.
We're hoping for 3, starting in May.
As the day of this article, the average 30-year rate mortgage rate dropped. It's around 6.5 to 6.7%. So they're saying, I know you've gotten people lower than that. No need to brag. As a result, obtaining a 6% rate may be possible, not may, is possible with Denise in the future. And if you've established a good credit rating, of course, that helps. If you're able to increase your credit score and obtain the lowest interest rate, it will reduce the lifetime cost of thousands of dollars. I would say tens of thousands of dollars.
Absolutely. You
I know.
cannot imagine. There are times even with my clients, if their score is right at the cusp, I'll do a rescore to help them get just over that threshold to really improve the pricing on their mortgage rate.
So this says here, example, bank rate, if you have a credit score of 760 or above, it's actually conceivable that you can get a mortgage in the low 6s, 6.3. Interesting. Comparing that rate with mortgages of 6.9 to 7%, which may be for lower credit scores, the difference payments may be for a $300,000 mortgage over a 30-year term could be over $44,000. Just that 0.6% difference in interest rate over the course of a 30-year loan. Interesting. $44,000 is nothing to shake your head at, even though I'm shaking my head right now. It's nothing just to shake your head at.
It's a lot of money.
It's a lot of kazash. All right. Great article. And if there's more to it, I'll post the link below.
Yeah.
You want to talk about any more of it? I know you love this. This is like your life.
It is my life. The whole number system of the interest rates. Right now, what's happening in my world are people are realizing they have spent too much in credit card debt.
At Christmas.
And Christmas and all kinds of things. I mean, the economy has been really hard on a lot of people, and they're trying to figure out how to pull the equity out of their house. They're terrified about increasing their interest rate, but there are times when it could make perfect sense to do that. Free up your money much sooner than the years you have ahead of you. That's my favorite part, John. That's my favorite
That just
part.
really pulls at my heartstrings. That is a favorite part, Denise. Well said. All right, so if you need help with any of the information we just talked about, this is Denise's wheelhouse. She's been doing mortgages now for how long? 5 decades, 6 decades? How long?
Oh, since 1997.
Wow,
Oh,
wow.
I know. I look good for 84, don't I?
Oh, so listen, if you need help with a mortgage, refinancing, reverse mortgage, or you just have some questions about your credit score, how to do this better and get your score higher so your interest mortgage rate is lower, boom.
Happy to
Denise,
guide you.
her contact info below. She'd love to help you out. Listen, market news. Here we are at the end of February, and what are we seeing out there with the real estate market here in Southwest Florida? Because we can't, and mortgage rates or loans. Are you having more coming in right now, less, the same? What are we at?
I have more of a mix of clients between refinances and purchases, but my phone is picking up speed.
That's the thing.
So busy.
Refis are happening again, aren't they?
Yes, they are.
They're happening. They're a portion of your business for a while. Zero,
Yeah.
because they were up at 8%. So who would refinance up there? But people who got 7.5%, 8.5%, now they're refinancing because they can get low 6s maybe.
Or like a client of mine who sees the benefits in building a real estate portfolio, pulling cash out of her house, even though the rate is a smidge higher, so that she can buy an investment property
Okay.
and start to grow.
Okay.
Everybody's sitting on all of this equity.
Okay.
We've got all of these homes in inventory right now for the first time in a very long time. I
you can
can't
find a
think
deal,
of a better
do it.
recipe.
If you can find a deal, do it.
Yep.
That's what I'm talking about.
Oh,
If you
sure.
can get in, build your home, your life, your what do they call that? Your assets.
Your
Build
personal
those up.
financial wealth.
Personal financial wealth. So we're going to connect you today with Denise. We just did that. Here she is. She'll take good care of you on all of your mortgage questions or needs. Probably my favorite episode that we've done so far. So hit the like and subscribe, like for Lulu.
She needs it.
And you know what? Believe it or not, we have one more episode this month. Yeah, February 29th. We get a February 29th this year. Can you believe it?
Oh my gosh, are you going to dress up like a frog?
Why would I do that?
Because it's a leap day for the leap year.
You'll see me in a frog outfit next week, apparently. I did not know that. Do people really do that?
I don't know. I think I might have just made it up.
That's genius.
I think so.
All right. See you guys next week.
Bye.